So you guys know I love to bring you guys the truth without the hype, and that's exactly what we're going to talk about today, because there's a narrative out there that everybody gets wrong, everybody buys into it, and the fact is it is just simply complete and utter and total BS. Now don't get me wrong, there are elements and truth in all of this, but when you actually dig into it deeply and you become to understand it, you realize that, hey, a lot of what you're doing and a lot of the fear that you have with investing during times right now, and a lot of the things that you think are going to happen to your stocks, but yet you see the opposite things happening, you start to realize it stems from this narrative right here. So it's something I had to address with you guys. We got to cut through the BS. We have to get to the truth. So make sure you like the video if you like the truth without the hype, and make sure you're subscribed too. It's like, I don't know, 50-60% of you guys that watch my videos actually fairly consistently aren't subscribed. So make sure you do that so that way you don't miss any of my content. All right, so I saw a few comments about this over the course of the past few weeks or so in a lot of my videos, so I kind of wanted to address it right here. And luckily, we had actually already discussed it in my group, but nonetheless, I had to clear up that rumor here in YouTube as well. So here it is, guys, and let me know what you think down in the comments. So Luke, as a non-US resident, there's a lot of talk about the bond market. The yields seem to be climbing very fast. Is this a concern for equities? So in regards to this question, do they correlate? Is there a problem, whenever bond yields are going up? What does that mean for equities? Well, typically it means equities go down, stocks go down, right? But that right there is where I don't really care about this particular metric, because that's talking about the market overall in general, which, as we all know, means absolutely zero to what's actually going on with your individual stocks. Now, if you happen to own index funds, other ETFs like that, that right there would be a concern, because of course it means money's coming out and going to the bond market, obviously, because yields are really, really high, right? So there are these very general, very broad points that are based upon this. So they can show, oh, hey, every time the yields go up, we can show the stock market goes down. That's absolutely true. However, I'm an individual stock investor, so for me, I can point to times and I can show you repeatedly over and over and over again where bond yields go up, stocks go down, and other stocks are skyrocketing during that time, and they're bucking the trend per se, and vice versa. There's plenty of times when bond yields are near zero. There was plenty of stocks that were losers over the past 3 or 4 or 5 years, right? Before the Fed started hiking rates up, there were tons of stocks. There's times when Apple was a loser and a penny stock was a huge winner during those same time frames when rates were near zero. So the idea that this has to happen and that has to happen, yes, it's true in the broader context of what we're looking at there in regards to, of course, more money is coming out of equities and flooding over there because you can get 5-6% basically risk-free over there in the bond market. That's all that they're talking about. And yes, that means money's coming out of stocks and going over to the bond market at a larger rate than it would prior. But that has absolutely zero to do with the valuation on Palantir per se, or take your pick of the stock. It just does. I can go through repeatedly throughout my career in investing where, hey, there's times when basically if you look at the way bond yields have gone overall for the past 15 years, they've gone down, which of course means stocks have rocketed up, right? But within that, some stocks just, basically got the basic return every year, the 8 to 10% that you're supposed to get every year. Some stocks underperform that. Some stocks have been in a downtrend for that 10-year period, 15-year period. And then other stocks have returned thousands of percent during that time. That's why I don't get wrapped around these type narratives and such that are true. They are true that, hey, more money is going to go run to the bond market than in the equities market, especially as that rate gets higher, more and more money will go there. But in regards to my individual stocks, it means very, very, very little. Now, if I owned index funds, that's a whole different story, and I agree with you guys completely. And those of you guys understanding that and owning index funds, that's definitely something to consider there. Or it may mean that index funds are on a discount right now, because those, bond yields are high and money's moving to that bond market there. But in regards to my individual stocks, there are stocks that are up hundreds of percent just this year, despite the fact bond yields have been crazy high for the past year. So there's just not the direct correlation that everybody thinks. It's a very general point. It makes for a great headline that, oh, work out there, stock market's going to crash because bond yields get this high and the market goes down. Okay, yeah, you're right. The indexes may trend down. They crashed last year. Clearly, we saw that. We saw and we all experienced that. However, a lot of stocks are still returning hundreds of percent. Somebody's going to have a great earnings call next quarter and they're going to really jump up in terms of price. There's just not really a direct correlation to your individual stocks. Your individual stock's performance on an earnings call means far more. Nobody's caring about what the bond market's doing in regards to Apple's earnings per se. Clearly, nobody cared about what the bond market was doing whenever Meta went on its epic run that it's been on, or Palantir, or any of the other stocks that have given us more than 100% return in just under a year in regards to those stocks. That had zero to do with bond yields and everything to do with being undervalued to a stupid point where money just piled in Oh, and then they were crushing earnings quarter after quarter after quarter, despite the rates going up, despite more and more money coming out of the stock market. There it was, Meta with a triple up plus during that same time frame that exact action was happening. That's why I just don't care about these type things, because they tell me a general maybe market movement. Maybe they give me a feeling of where momentum is. Okay, I can buy that to a degree. But in regards to what's actually going on with my individual stocks, it really has zero to do with it. Heck, during the time when bond yields were near zero because the Fed rate was down near zero, and basically even Apple's paltry dividend yield was beating out those, bond yields, nobody still wanted a piece of Apple during that time because that wasn't where the trade was. The trade was in the penny stocks and some of the other ridiculous things that were going on, and you could pick up Apple at a stupid discount at the time. So you can just kind of go through example after example of this to where, sure, broader indexes, you may be able to draw some correlation, some other things like that. But in regards to individual stocks, I don't pay attention to what the bond yields are doing. What it means is maybe I can't get an epic run, but I can't even really say that because we just saw epic runs in stocks like Meta and a lot of others over the past year, Nvidia over the past year. Boy, bond yields sure as heck hadn't killed that stock at all. Or even Tesla doubling up here, or more than doubling up over the past year. I mean, you kind of look at a lot of these sort of things and you kind of start to realize that, okay, there is a story there, but in regards to my individual stocks, it comes down to valuation, having that plan, having that price target, and where that valuation is, and then where the stock moves from there is far more important than any of the rest of these other things that kind of can generally tell you something. But in regards to your individual stock, the individual performance of the company is what matters, not what bond yields are doing, not what the Fed is doing, not all these other things that can have effects, but they're not direct correlations to Meta stock. They just aren't. It's how does Meta stock handle that environment? And then if they handle it very well, Meta stock's going to continue to rocket up. Or Tesla, or pick your choice there in regards to stocks. There's no doubt in my mind if Elon wouldn't have been cutting prices, we'd be seeing Tesla at a lot higher price, but he chose to sacrifice EPS and short-term pain in the stock for long-term gain in terms of taking market share. So there's just a lot of individuality to all this sort of stuff. And it's why I just ignore noises like that. I don't care. I don't care about bond yields. I don't care about any of that sort of stuff like that, because I know over the long run, I know exactly what matters. And I know my individual stock performance is what is going to actually create a buying opportunity or a great run in a stock. And boy, I sure was glad whenever I bought, when everybody was saying don't buy because bond yields are going up and money's going to continue to come out of the stock market and you're never going to be able to make any money. And that's the reason, that's where people get these crazy ideas that, the stock will just continue to fall, continue to fall, continue to fall with no end in sight, which holds true until it's not true anymore. And then when it runs up, everybody's like, oh, wait, just wait. Those bond yields are high. That money's going to come back out. Don't worry. And as you see throughout history, that's just generally not the way that this works. So, and remember, if you want to see 3 to 5 videos like that every week, you want to be able to slide into my DMs, talk to me anytime you want, take 5 courses for free, be able to use our stock analyzer tool for free, be a part of the best 6, 7, and 8-figure Discord out there. Make sure you check out the pinned comment down there and see if a membership's right where you get that and just a ton more. Watch list with price targets, buy and sell alerts. There's so much, guys. Just make sure you check out the pinned comment and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.